Well, thank you. Thank you, Crystal, and welcome everyone to today's presentation. You should be receiving the handout. It's actually a complete workbook that has lots of information, lots of handouts. So we're going to be covering a little bit of two topics in here. So welcome everyone to today's presentation, Understanding Money and Credit. Thank you, American Heritage Credit Union, for their partnership. One of the greatest satisfaction in life is having a sense of control over your finances. So, through careful planning and use of money management techniques that anyone, all of you can learn, a family can feel more confident about its ability to live within its means. Also, we should be able to handle emergencies. We should be able, but having all these tools, we should be able to reduce debt and ultimately save for the future. Financial control is achieved by knowing where you are. Where are you? Where are you today? Where is your economy today? Where is your financial stability today? Also, is achieved by knowing where you want to go. What is it that you want to achieve? And what you want to do with your money. Understanding how to manage money and credit and developing the discipline to do it well can make a real difference in your life and the life of your loved ones and the life of your family. The tips, guidelines, and worksheets that I'm going to be following with you are designed to help you understand and improve your financial situation. Okay, so lots of great information on this topic, understanding money and credit. A little bit about Money Management International. We are a national full service nonprofit financial education and counseling organization. Our mission is to improve life through financial education. Money Management International provides a variety of services that helps consumers achieve their goals and be able to manage their personal finances. One of those programs that we offer is our free online learning program, learn.mmiuniversity.org. At the end of the presentation, you will be able to see the last slide with that information. Also, our website will be included in there. Other services that we provide, budget and credit counseling, it is available for free, 24 hours a day, 7 days a week. Again, at the end of the presentation, you should be able to see our phone line, but not only our phone line, available 24/7. We have a dedicated phone line for all the members and non-members of the credit union. So we are here to help. We are here to give you lots of resources and advice. Other programming services that we're able to provide, we are under the U.S. Department of Housing and Urban Development, that it stands for HUD. So we are able to provide all types of counseling and education when it comes to housing. We provide also the debt management programs. We are also able to provide student loan counseling, and that is available also to everyone. We also have a post-disaster recovery counseling for consumers who have gone through a disaster. And we are able to provide a pre-bankruptcy and post-bankruptcy counseling and education. And of course, we have the education department with lots of information that we are able to offer with the help of our partners, just like American Heritage Credit Union. At the end of the presentation, you will be able to see our last page and the PowerPoint presentation with our website and the phone number available for all of you to reach a counselor. We are certified by the National Foundation for Credit Counseling, all our counselors and educators, and we are also a certified agency under the U.S. Department of Housing and Urban Development, HUD. All right, okay, so here is what I am going to be covering today. We are going to be talking about setting and achieving financial goals. How are you able to determine your net worth? Calculating your gross and net income. And this is part of establishing your budget. So we are able to talk about your fixed, variable, and periodic expenses. The importance of distinguishing between your wants and needs, the importance of keeping financial records. We'll talk also about understanding the wise use of credit and some alternative that we're able to use rather than using credit. And the last thing is the importance of committing to a saving plan. Okay. It will take some effort to follow all these steps completely, but the process may require making some changes. And these changes, whether they're big or small, may seem maybe difficult or awkward at first. They will help you. The main thing is committing to make that change. Okay. Remember that we should stay flexible and realistic during this process of change to make sure that we are achieving our financial goals. We also need to be honest with ourselves. We need to believe in ourselves and be open to alternative, be open to other solutions, because you, myself, all of us, we have the power to take control of our money. Okay. All right. So, again, taking control of your finances. Okay. So, assessing your current situation. Very important to ask some of these questions. Do you need to control your finances and practice better money management skills? Are you giving it a good try, but you still need help? And do you have the ability to keep your finances under control? So these are very important questions, just like what I just mentioned. Knowing ourselves, making sure that we have the ability to make that change, to commit ourselves, and then making that change, and also knowing what are the needs and wants. Very important to know where are we at this moment. What are the changes that we need to make? What are the things that we need to learn? Maybe we'll need an extra help or an extra advice from someone else. So the first thing is taking control of your finances. On your financial journey, knowing where you are starting from simply means knowing what you own. Okay, what you own is your assets. Okay, these are your assets, and very important to know what are the things that we owe. What do we owe? Liabilities. So assets are defined as physical property, such as a home. So if you already own your vehicle or whatever portion that you already pay, or if you have a home, what are the portion of your mortgage loan that it is already yours? If you have any monetary property, such as mutual funds or investments through your work, or if you have CDs, or if you have savings and a saving account. Those are all your assets. Okay. Liabilities are the debt that you owe to someone else. Okay. If you have a mortgage, what is that balance of that mortgage? If you are paying your auto loan, okay, what is the amount that you still owe the bank? If you are carrying credit card debt, what are those balances? Any other type of loans that you have, any other contractual obligations that you may have. Okay, so it's very important to really record all of this so you're able to calculate your net worth. So once you do that, you are able to know the results. If you have a positive amount when you take all your assets minus liabilities, if you have a positive amount, that means that you have a positive net worth, indicates that your assets are larger than your liabilities. So you are doing okay. You're doing good. Not okay, you're doing good. A negative net worth indicates that your liabilities are larger than your assets. So this should be the first step. Where are we right now? This is the the first thing that we need to do to be able to calculate our net worth. So this will serve as a benchmark that can they can be taken to make changes, to really know how to achieve our financial goals. What are the things that we need to change? What are the things that we need to do to make it a positive net worth? Okay. All right, let's talk about financial goals, financial priorities. You might find that you will not be able to begin working on all your goals, and that is okay. Not all the goals at the same time. It is very important to prioritize your goals in terms of how important they are compared to each other. Okay. In addition, you will need to decide when each goal can be included in your budget. Now, before you begin making your list, it is important to know the difference between needs and wants. Needs and wants. Okay. So a need is a necessity, something that you cannot do without or is required by law. It satisfies the basic requirements of food, clothing, shelter, medical care. It also should include auto insurance, home maintenance, any daycare responsibilities for your children. So those are needs. And want is something that is nice to have. Okay, it's nice to have, but it's not a necessity of life. Okay. Examples of wants maybe uh new clothing, new shoes, things that we at this moment don't need. It may be something that we see advertised on the TV or social media, but that is a want. Okay, those are wants. So very important to really understand what are the difference between wants and needs. Wants and needs. So developing a specific financial goals, and it is also very important to write them down. Okay. When you write your goals is a key step in the money management process. Establishing those goals, and if you share your household with someone else, it's very important that it is communication. There is communication in all of this. It's not just the one person goal, it's the whole entire family. is the whole entire household. So establishing goals will help you determine where you want to be financially, and recording your goals will motivate you and the rest of the family to make the changes necessary to achieve them. Okay? Remember, some family members may have different perspective of what they consider a financial priority. So it is important to make a goal setting a family affair, okay? A family affair. When we are talking about goals, remember the goals differ in the length of time needed to achieve them. Okay, some goals will be easier to achieve, so those will be a short-term goals that we are able to achieve within the next 2 years or less to accomplish them. Then we have the mid-term goals, and these are goals that will take a little longer, maybe 2 to 5 years to achieve them. And long-term goals are the goals that will take longer than 5, 10, 15 years to achieve them. So no matter how long your goals will take to achieve, both financial goals require regular savings, okay? When you are talking about your goals, remember that your goals have several characteristics that you need to keep in mind. They need to be specific for you, for your personal situation, for your household situation. They need to be measurable, attainable. They need to be realistic, time sensitive, and very important to keep those goals in a visible uh, area where it serves as a reminder, not only for you, but also for the rest of the family. It is also very important to have a family meeting and review your goals at least once a year or I'll say once every 6 months is very important, depending if it's a short-term goal, maybe it's a vacation, maybe it's a special celebration. It could be, maybe getting out of debt, reducing debt, maybe saving for a vehicle, maybe saving for a down payment for a house. So yeah, it is very important to review them. It says there once a year, but we always says the more you review it, the better. You want to make sure that you are on track, that you are on track. Okay. All right. Protecting your assets, and this is also knowing, your financial situation. So with your net worth statement, remember that is the statement that I showed you earlier, you have a clear picture of the value of your assets. So it is important to consider the risk that we may face as we develop a plan to protect our assets. So in general, they are three types of risk: loss of personal and real property, loss of income, and monetary assets. So to manage risk, many consumers use a variety of techniques to really manage that risk. But one way is to self insure by having savings, by having investments, by having the right protection. Okay, the right protection. So when we are talking here, we're talking about insurance. Insurance is a product that consumers buy that we cannot see. Okay, this insurance is an item that we cannot see, and hopefully we'll never have to use it. Okay, but it's there available in case that we need it. Okay. So it is very important for you to really, when you're looking at your financial situation, do you have enough auto insurance? Okay. Will the auto insurance pay for damages, injuries, and other losses specifically covered by your policy? It's very important that every year we should look at those policies. Talk to your representative and said, okay, what is covered, what is not covered. Homeowners insurance, same thing. Homeowners insurance may not be mandatory, okay? But it is, especially when we already have paid our mortgage, but it is an insurance that it is a must. It is a must. I get that question all the time during my home buyer workshops. Oh, after I pay my mortgage, should I have insurance? Of course, we should have an insurance. Okay, it will insure your largest possession, which is your home. Okay. Again, very important every year to review that policy, what covers, what doesn't cover. Health insurance, and we've seen it lately with the cost of medical care rising every year. Health insurance has become a necessity. Okay, are you the head of household? Do you have a small children? Do you have adolescent? Or is it you yourself only? What covers, what doesn't cover, how do you protect yourself, how do you keep yourself healthy. Life insurance, the primary purpose of life insurance is to help the people who depend on you financially, so they are able to keep and maintain their standard of living after we're gone. So this is something that we need to really choose as needed, depending of our situation, our household. Rentals insurance is very, very important. If we are a renter, we need to have rental insurance, and rental insurance is one of the cheapest insurance available out there. Talk to your insurance company. If you rent, nowadays what we have seen is that a lot of apartment complex, a lot of the landlords are requiring to have that renters insurance, and we are able to bring our own renters insurance. Don't let your apartment complex provide that. We are able to provide our own renters insurance. Another insurance up there, depending of your personal situation, short-term disability insurance, and also look at the umbrella policy insurance. So these are information that we always need to keep in mind. Okay. Creating a budget. Okay, so now that you have established your financial destination by setting and prioritizing your goals, so now what we need to do is get there to be able to achieve our goals. So how are we going to be able to do that? By creating a realistic monthly budget, or in other words, a spending plan. Okay, a budget and a spending plan is a valuable tool that is going to guide us to see where our spending is going. Savings, are we saving enough? How much money we have coming in? So, enable for us to create that budget, that spending plan, we need several things, okay? Several little ingredients. The first one is to know how much money we have available. Okay. And then from there, we're going to see the second ingredients, which is where the money is being spent and what adjustments needs to be made. Okay. So for that, we do have the income worksheet. And remember, the workbook that you're going to be receiving has all these handouts. So please take a look of all the handouts that you're going to be receiving. Okay. All right. So ingredients to create your budget. Remember, you have gross income. Gross income is the total of your personal income or your household income before taxes or deductions are taken out. Okay. Then after all the deductions are taken out and we get a check and that check goes directly into our checking account, or if we get it, that will be our net income. That is the money that we have available to spend. Net income is what is left after all the deductions, all the taxes, all our obligations. Okay. So this is the amount that we actually receive as an income from all income sources. All right, so then from there, where is the money being spent? Where is the money going? So the next one is to really know the difference between the expenses that we have. There is a great handout in your book that it is called Record of Daily Expenditure. That is a great exercise that I advise everyone to do. Okay. It is a way for us to know where the money is being spent. Okay. It is a 31-day exercise. So I have 31 days and you should be able to record all your daily expenditures. Why? Because it will allow you to know where the money being spent, maybe finding out where your leaking expenses are, okay? And being able to know exactly how much money is being spent on each category. Okay, so I advise everyone to do so. So then from there, we have the expenses. So we have fixed expenses. Usually, these are the expenses that do not change from month to month, they don't fluctuate. Okay. And they're monthly. For example, your rent or mortgage payment, your car payment, your car insurance, your auto insurance, or any other type of monthly insurance you may be paying out of pocket, any personal loans that you may be paying, savings, any donations to your church or charity, um, any monthly expenses, same amount. Look at your utilities and see which ones are the same amount. Your cell phone, maybe your cable, your internet, your daycare, same amount every month. The second expenses are going to be your variable expenses, and those are the expenses that vary from week to week. Okay. Well, from month to month. Okay. Because the monthly expenses, the budget is a monthly thing. So variable expenses vary from yeah, from week to week, month to month. So they are the most flexible. Which are this? Your grocery shopping, your food, your purchase of food, your gasoline, your food out and entertainment, your utilities. You may your electricity, your water bill, your heating bill, anything that differs from month to month. That should be in there into your variable expenses. Very important to calculate what is the average that you need to have every month to be able to cover that expense. Okay, even some month will be lower, some months will be higher, but you should have the amount available to cover when the bill comes. And then the last expense will be your periodic expenses. And periodic expenses generally happen once a year, twice a year, 3, 4, 5, 6 times a year. Example of this expenses will be your holidays and celebrations, your car maintenance, oil changes, your home maintenance if you are with a mortgage, if you own a home, Another one will be visit to the doctors, co-pays, if we use glasses, contacts, vacations. Yes, vacation. Back to school expenses, clothing, health and beauty supplies, cleaning supplies. If we have a pet. So all of those, we need to sit down and look at all those expenses. And for those expenses, we need to estimate the annual spending. We need to estimate the annual spending and divide that into 12. Okay, and divide that amount into 12. And that way, every month, you're saving toward that expense. So you might be saving 5 or 10 or 15, $20, and then you're able to cover that when the expense comes. Okay. It is very important to record all your expenses, record all your income. And the last thing that you got to do is you want to take your income minus your expenses. You need to subtract your expenses from your income. Okay. So, this is the hardest part of the budget because whatever we find, if it's a positive amount result or it's a negative amount result, that we need to make adjustments as needed. And this is the part of one of the hardest part in the budget is to really make those adjustments as needed. But they are important to do so. Very important to do so. Okay. Um, very important to do so. Okay, so if the amount is a positive number, then we need to make sure, are we saving enough money? Are we paying all our bills in full? Are we paying our debt aggressively? Have we included everything? Do we have adequate protection when it comes to insurance? If we have a negative, then we need to either increase income, reduce expenses, or a little bit of both. Okay, a little bit of both. Um, so it is important to do a adjustments as needed. And remember, family meeting, family meeting. A budget is a key element in successful money management. All right, it is very important to have a spending plan. Although the process may seem difficult and time consuming, it is vital to gaining control of your finances. A working budget is more than just a list of categories and numbers. Okay, it is more than that. It becomes a family's plan. Okay, it becomes your plan for savings, and really knowing what we have available to spend and what we don't have available to spend. And also, having a budget, having a spending plan is our roadmap to reach our financial goals. To reach our financial goals. Okay? Having a budget is going to help us increase savings, is going to prevent us impulse spending, is going to decide what we can afford, identifying expenses that we can reduce, and be debt free. Be debt free. Okay. And again, including the whole family, including the whole household, because a budget must work for the entire family, not just for one person. Okay, there's no single budget formula that is as successful for all households. So it is very important to include the family meeting and to have, to be all in the same path, in the same road. Okay. All right. So let's talk about understanding credit and using it wisely. Okay. And here are some important, questions to ask ourselves. Remember, credit is one of the most important financial tools that we have. If we use it wisely, credit can be part of a sound financial management plan. Okay. There are good reasons. I mean, there are good reasons to use credit. A lot of times I hear in my class that people say, no, I don't want to use credit because credit uh, 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 take you to be in debt. No, not necessarily. Making sure that we use it wisely is the right thing. Okay, but the reasons that we need credit is to buy large items such as home purchase, maybe for education, maybe to buy a vehicle, or sometimes some consumers have an emergency credit card that they only use for emergency because they may not have enough savings. Okay. There are situations when people should not be using credit, and that is when they want to buy luxury items or items that they they cannot really afford, or maybe what we call bad loans or bad credit. Not bad loans, bad credit is just like buying things that they are too expensive, or just things that they're just tangible, like clothing, shoes, things like that. So when you using credit, uh, we are really borrowing from our future earnings, and we're limiting ourselves to spending. We're limiting. You're limiting your spending and savings, for especially your savings for the future. So it's very important that when we start using credit, um, we use it wisely. Credit is an obligation, it's a responsibility, it's an advance loan. It's buy now or purchase now and pay later. But we should have that amount that we're charging in the credit card in our budget. And that way we're using credit wisely. We're paying it completely at the end of the month to avoid interest rates. Okay. So when we're trying to establish credit, or when we're using credit, make sure that we shop around for the best interest rate. We need to keep balances low. Um, use some people use it for credit emergencies. um, and it's very important that we don't spend more than what we can afford. Very important to monitor your credit, and I will show you that in just a few minutes. But there it is, annualcreditreport.com. All right, so we have three credit reporting agencies, and those are Equifax, TransUnion, and Experian. So who are these credit reporting agencies? These are privately owned companies that they are located in different areas. One is in Georgia, one is in Pennsylvania, and one credit reporting agency is in Texas. These three credit reporting agencies, what they do is that they collect and distribute account information that they receive from different sources. Okay. What they do also is they compile this information, and they build what is called a consumer credit report. And this is the only way, through a consumer credit report, to a credit report, that is the only way that they're able to distribute, to give the information that they have collected. Another important thing about these three credit reporting agencies is that reporting to them is volunteer. Okay, not everybody report to all of them. We all ended up having three credit report history. All of us will ended up with three credit report history. And these three credit reporting agencies do not make any lending decisions. They do not they do not deny it or approve any type of lender. So once they build a consumer credit report becomes a record. It becomes a history of how an individual has repaid credit obligations in the past based on the information that is being supplied to the three credit reporting agencies. Okay? So Equifax, TransUnion, and Experian. All right. So back in the 2003, there was a law that was enacted, and that was the FACT, the Fair and Accurate Credit Transaction Act. That was in 2003, that allows consumers to request their credit report completely free. Okay, so back in 2003, free of charge once every 12 months. The form is in your handout, it's in your workbook, okay? And it will show all these three ways that you're able to request your credit report. Also, it's very important for you to request your credit report because back in the 1970s, there was one law that was created, and that was the Fair Credit Reporting Act. But in 1976, everything about the right for us to request our credit report. But then in 1996, there was an amendment done to the Fair Credit Reporting Act where sets up a process for consumers to dispute errors that had been showing on your credit report. Okay. And this process is free. We are able by law to dispute our errors directly to Equifax, TransUnion, and Experian. Okay. Now, one important thing to know is that since the end of 23, beginning of 2024, now we are able, under the FACT, we are able to request our credit report once a week for free. Okay, so please do not buy your report, do not buy your score. It is free of charge. Okay. Debt to income ratio. Okay, debt to income ratio. So we are in debt, or we're using credit. Remember, cost of using credit. So we are just using someone else's money that allow us the privilege of purchasing today rather than waiting to save enough money for that item. But it is very important to understand that there is interest that is involved in here. Okay, the interest rate and long term. So it's very important that we understand what is the cost of using credit. What happens if I don't pay my balances in full? And this is going to sometimes make consumers go into debt. So it is very important for us to know what is the debt to income ratio in our household. Is it a ratio that is reasonable? Are we able to pay it? I will be okay to pay it. Okay. So a debt to income ratio is just the difference between how much we have coming in, what income we have in, and what is the balances of all our debt. So this is something that we're able to see when we do our net worth. Are we having too much debt? Are we okay? So in your book, you're able to calculate your debt to income ratio, and that's going to give you a percentage. That is going to be a result, is going to be a percentage. So if your result is under 15%, then you're okay. If your result is between 15 and 20%, then you need to be cautious. But if the result, okay, if the result is over 20%, then we need help. We need help, okay? So if you think that your debt load is preventing you from reaching your goal, then right now that should be the priority, is to reduce that debt load, reduce the balances and all the credit card debt or any other personal loans. In your booklet, there are various handouts, as I've been mentioning. One of those is for you to be able to determine in your debt load, making the calculations, and be able to arrange your accounts in order. Okay. And that way you're able to list all your creditors, be able to arrange all your creditors. All right. So credit cost. Remember, if when we're carrying credit, we are reducing the amount that we're able to save for the future. We are borrowing from our future earnings. All right. Committing to a saving plan. Saving is an essential part of any management plan and can be accomplished by careful purchasing, by reducing your spending, and being able to set that money first. Okay, setting that amount of money first. It's like paying ourselves first. Once we get that income, then we take from that income, that net income, and that way we're able to have a liquid saving account. It's money that we're able to withdraw if we need it, or also if we are employee and our employer participates in any long-term savings. Very important to save from, and a lot of them, excuse me, we're able to save from our gross. Okay. So it all comes to needs and wants. Needs and wants. What is it important to us? How can we save money? Okay. Also, when we are saving money into our budget, within our budget, especially for our periodic living expenses or our variable expenses, it allow us to be able to pay those obligations. When we are saving and we're having savings available, we are able to manage any financial crisis, any financial situation that we may encounter, and also allow us to save for our goals, maybe a short-term goal, maybe a trip, maybe also when I mentioned to participate in your employer saving plans. If they give you one, you're saving for your long-term goals. Okay. um, so it is very important to commit to saving, very important to reduce expenses whenever we are able to. Uh, and and that way we're able to find money and put it aside. All right. So making that commitment. Saving is the first step to building wealth. So here is making the commitment to save, to be able to have money available in case that we need it, and taking control. So making that commitment again, needs versus wants, savings, budget, reducing debt, whatever, being able to reach our goals. So once you have that family meeting and you're committing, you're making that commitment, you are making those changes, you're going to communicate. So taking the time to talk, about everyone's needs and that family, okay? And then making sure that everybody feels an important part of that plan, of that goal. Um, be prepared to compromise, okay, and work cooperatively. Very important to agree as a family and taking control. Every family member must exercise control and avoid unnecessary spending. If it's you only, if it's a one person only, then it is easy, very easy. Okay. But if you are with someone else, with a partner, a spouse, then very important to talk about those goals. Communication, cooperation, and taking control. Making savings a family priority. Then together you can take control of your financial future. All right, so I have included here a little bit of everything. Um, so, how to assess your financial situation, the importance of setting financial goals, creating a budget, um, looking at your credit, making sure that you're using it right, requesting your credit report, monitoring your credit report, and committing to a saving plan. Today's presentation is designed for educational purposes only and should not be construed as an investment, tax, or legal advice. All right, so here is, as I mentioned earlier, our website, moneymanagement.org. There is also our learning program, our online learning program. You also will see that in the handouts, the booklet that I share that all of you will be receiving. And there is also the dedicated phone line available 24 hours a day, 7 days a week to all the members and non members of the credit union. Okay.